Thank you, Rohini. Good morning, everyone here. Let us go into the session blocked credits under GST. Let me share. Hope you all know the concept of GST and ITC. Though I will explain the basic of the GST and what is the government intention collecting the GST and giving the ITC. Okay, let me explain all the blocked credits now. In case of any queries, any questions, please note it down and let us discuss at the end of the session. Blocked credits under GST is covered under section 17 and subsection 5 of the CGST Act 2017. First, let me explain what is the government's ultimate intention. Begin giving ITC and collection of the GST. Say, for example, yeah, pen is cost trader. There is a trader. He is purchasing and selling a pen. The cost of the pen he is buying is purchasing is ₹10. He is purchasing for ₹10, and the dealer from he is purchasing is charging a GST at 5%. For example, take it example. It comes to 0.5 rupees. The total cost for his purchasing is ₹10.5. Government needs what the government needs is the GST, not the GST on the purchase cost. The ultimate consumer is getting, right? The government needs the GST amount of the sale price on which GST collected on sale price the trader has sold. Okay, so what is this? He's, for example, he's selling that pen. He's bought for ₹10, right? He's selling that pen for ₹20, and he would collect the GST at 5%. That is ₹1 from the end consumer. That is, end consumer means he's going to use that pen. End consumer, and he is charging ₹1 GST, and his total sale price is ₹21. The government needs the ₹1, this ₹1 for the pen he has sold, not the 0.5 rupees. The ₹1, the government needs this ₹1. So already this this seller has paid 0.5 rupees GST to the government through the dealer or the wholesaler. The remaining 0.5 rupees he has to collect from the end consumer, and he will collect the 0.5 rupees from that 0.5 rupees he paid to the government from the end consumer only. So totally he is collecting ₹1, and he will remit this 0.5 rupees to the government. So what he has paid initially, this 0.5 rupees, he can take the ITC, and remaining balance 0.5 rupees out of this ₹1 alone, he has to pay to the government. So ultimately, the government has received ₹1. So now what we are going to discuss is this 0.5 rupees, the ITC 0.5 rupees, whether the trader or is the provider of service, whatever, whether he can take the whole ITC he is receiving, or wherever he is giving, wherever he is purchasing, wherever he is availing the service of anything, he will give the GST number, the input credit, the input will get credited into his GST account. But whether he can avail all those credits or not, that is what we are going to discuss. Blocked credits under section 17, subsection 5. Now, first one is class A of this section 17, subsection 5. Motor vehicles. This, so what we are going to discuss is there are 9 classes. 9 classes. Whatever these 9 classes, whether these credits are blocked. What if you get credit on these purchases or avail services, those credit you cannot avail. You should not use that credit to pay GST. First one is class A of section 17, subsection 5. Motor vehicles for transportation of persons with seating capacity less than or equal to 13 persons. Say, for example, a manufacturing company or a software company, anything, is purchasing a car to pick up and drop the CEO or chairman of the company. Whether for that car, purchase of car, you have to pay the GST of 18%. You will give your GST to that car person. He will file everything. He will file GST return, and you will the credit of that 18% of the on the purchase price of the car is credited in your GST account. Whether you can take that, whether you can avail that GST or not, you should not avail those companies, those manufacturing companies or software companies should not avail the credit of those car purchase for that company, because the government is charging the GST for the selling of the car. The government needs to, what the government wants was, if you are purchasing and if you are availing the ITC, that company, that manufacturing company or that software company, purchasing and availing the ITC, it will not get the GST amount from the end consumer, correct? Because the software company, they will export the software services, it is exempted under GST. They will, if they take ITC, means they will not get the GST amount from the end consumer. That is the intention behind this block credit. But exceptions are seating capacity less than 13%. If it is more than, for example, companies buying or purchasing a bus. What is the seating capacity of a bus? It is greater than 13%, right? If it is using that bus to drop its employees, to pick up and drop its employees, or even if they want their CEO or chairman to come in that bus also, it is the credit is available for that bus. But some exceptions are, who can avail those ITCs on purchase of cars or motor vehicle with less than seating capacity of less than 13%. Who can avail? Say, for example, a car dealer. Car dealer means he is purchasing a car from, take the example of showroom, anything, Maruti, Toyota, Tata, whatever. If the dealer is purchasing the car from the Toyota, Tata, whatever the brand it may be, and he's selling that car from that showroom to the end consumer. The end consumer, whoever it may be, the end consumer, he is going to collect the GST from that end consumer. So that car showroom person can avail the ITC of the cars purchased from that particular brand person. That is what they have given. If you are going to make further taxable supply of such motor vehicles, you can avail the ITC of the cars or motor vehicles purchased with seating capacity less than 13%. are making taxable supply of transportation of passengers. See, for example, a travel agency is buying a car. Traveling agency buying the travel agency is buying so much of or 6 or 7 or cars they are buying. They can avail the ITC of that car's purchase because they are going to rent it out or for they are using it for higher purpose. They are using it for rental purpose. So they can avail the ITC of the car's purchase. Then making taxable supply of imparting training on driving school persons. Driving school will purchase so much of cars. They will purchase variety of cars. They can avail the input of the cars purchase or motor vehicles purchase. But what is the definition of motor vehicles? Motor vehicles includes all the motor vehicles, all the motor vehicles for the purpose of whatever I said is motor vehicles, all the motor vehicles. But these motor vehicles, these 3 motor vehicles, they can avail ITC without any restriction. What are those 3 motor vehicles? Vehicles running upon fixed rails. Some large factory, for example, a cement factory, or this Neyveli NLC and all, they may have some fixed rails to transport the that coal or cement. Okay, rail means not only train or goods train. Okay, they are, if they are laid some track and they are using that vehicle on that track means for that vehicle they can avail the ITC. Special purpose vehicles for being used in a factory or in an enclosed premises. Special purpose vehicle means for example, in a factory, in a tire factory, or some heavy lifting articles or that metals and all, you have the special purpose vehicles. Those vehicles, how they lift the weight, they lift the very weight articles or metals. Those special purpose vehicles use inside the factory. It should be, and one condition is they should be used inside the factory or any enclosed premises. They should not, it should not be used in the output. Vehicle with less than 4 wheels. 4 wheels fitted with engine capacity of up to 25 cc. That is, for example, a tricycle or a two-wheeler with less than 225 cc with engine capacity of up to 25 cc. There are they may use a tricycle with they are fitted some motor. Those vehicle and all you can avail the ITC. Next is this class A only, vessels and aircrafts. Vessels and aircrafts also the same condition. Vessels and aircraft only if you use for further taxable supply of such vehicles. That is, if you are buying and you are going to selling that vessels or aircraft means you can use that for making taxable supply of transportation of passengers. Okay. Vessels for transportation of passengers you can use. In Kerala and all, they'll use this vessel to transfer. They'll use mini vessel to transport from one place to another instead of using two-wheeler or something. For that purpose, you can avail the ITC. Same, imparting training on navigating and imparting training on flying. Driving school, if they are going to run a vessel driving or a training on that vessel, or they are imparting training on flying such aircraft. There are driving school for aircraft. So many aircraft driving schools are there. Those persons, if they buy vessels or aircraft means they can avail the ITC. Transportation of goods. Vessels and aircrafts used for transportation of goods. That person may do any kind of business. that is not a problem. If he using that vessels and aircrafts, that is ultimate purpose is you have to use and earn and collect GST using that vessel and aircraft. That is the ultimate aim. Using that vessel and aircraft, using for the personal movement or using it for the navigation of that employees of that concern, that is prohibited. So if you are going to earn using that vessels and aircrafts, you can avail the ITC. That is what they are given in the, if you are doing the taxable supply of transport. Note the word taxable supply. Only if you make taxable supply of transportation of passengers or transportation of goods or making training or on such navigating and flying of such vessels and aircraft. Only for that purpose, you can avail the ITC. Some examples. ITC on cars purchased by a manufacturing company for official use of its employees is blocked, as I said earlier. ITC on cars purchased by a dealer for sale to customers, that is end consumers, is allowed. ITC on cars purchased by a company engaged in renting out of cars. Renting people, the travel agency, they can avail the input on the cars purchase. By a driving school, ITC on cars purchased by a driving school is allowed. ITC on buses. Buses means you will be having the seating capacity more than 13%. For transportation of employees from the is allowed. ITC on trucks purchased by a company for transportation of its finished goods is allowed. Because trucks has the passenger capacity less than 13% only. Less than 13% only. But it is used, since it is used for its transportation of finished goods, the ITC is allowed. Same in case of ITC and aircraft purchased by a manufacturing company for official use of its CEO is blocked. ITC and aircraft purchased by an aviation school. Aircraft purchased by a manufacturing company for official use of its. These are rare practical example, but it is happening. Okay. ITC and aircraft purchased by an aviation school providing training on flying aircraft is allowed. Next one is, what you have seen is ineligible motor vehicles. What are the ineligible motor vehicles we have seen? Motor vehicles with less than seating capacity of less than 13%, including drivers. For those motor vehicles, ITC is not eligible. While purchasing that motor vehicles, you should have take the insurance for that, or not only during the purchase time, in the future also. After purchasing, yearly once you have to pay insurance, or you may avail this service for that vehicle, or you may avail the repair and maintenance relating to that vehicle. Which vehicle? Vehicle with seating capacity less than or equal to 13%, and it is also used for the purpose of the picking up and dropping of the CEO or chairman of the company. For those vehicles, if you are availing insurance, if you have paid GST for the general insurance, servicing, or repair and maintenance, those ITC are blocked. If the exceptions are, if such services, for example, those manufacturer of the ineligible motor vehicles, car manufacturer, they will place the car in their showroom or in their godown till the order or sale order till their next sale order received. For that, they will, for the stock they are maintaining, they will take insurance on that manufactured car which is in the godown, or they may avail the third party service from outside. They may charge the GST for the that insurance or service availed by the manufacturer of those vehicles, those ineligible vehicles. He can avail the ITC of that. Those manufacturer can avail the ITC of the ITC of that service availed. So till last, what we have seen is purchase of, whether you can avail the ITC of the purchase of cars or purchase of motor vehicles with seating capacity less than. This is the service, availing service on that ineligible motor vehicles, what we have seen up to this one. These services are, can this ITC on these services can be availed only by the manufacturer of the ineligible motor vehicles or vessels or aircraft we have seen. And this general insurance service, servicing, repairing or maintenance, ITC on these general insurance can be availed only by the business, the same line of business. See, for example, I am doing the general insurance service, or I am doing the servicing of the, servicing means car service or motor vehicle service, whatever. I am doing the repair and maintenance of that motor vehicle. If I availed the general insurance from any other persons, or I availed the servicing from any other person, or I availed the repair and maintenance work from the some other person, and I have paid the GST for those general insurance, for those service, for those repair and maintenance. Since I am doing the same line of business, that is, I am also doing the general insurance business, I am also doing the servicing, the same servicing of the motor car vehicle, I am also doing the same repair and maintenance work, I can avail the ITC of those general insurance. I have ITC on the GST I have paid on that general insurance service, repair and maintenance. So what the government is saying is, if you are in the same line of business and you have availed the same service or same goods and you have paid on GST on that, you can avail the GST. If it is in the different line of business, that's what the previous scenario also we have seen. Further making of taxable, further taxable supply of such motor vehicles. That is, you are buying the vehicle and you are selling the vehicle. You can avail. So ultimate aim is, if you are in the same line of business, you can avail the ITC. Next one in the class A is leasing, renting or hiring of motor vehicles. The same motor, wherever here motor vehicle is mentioned, it is the ineligible motor vehicles. See, for example, if you are purchased that car, if you have purchased that manufacturer, a manufacturer has purchased the car, and for occasionally he is leasing or renting, hiring of that motor vehicle, he cannot avail the ITC. The same what we have seen before itself is given here. Such services when used for making an outward taxable supply of the same category of service. See, I am doing the business of leasing, renting or hiring of motor vehicles, and I have paid GST on leasing, renting or hiring of motor vehicle for my business purpose. On that cases, I can avail the ITC. If I am not doing the leasing, renting or hiring of motor vehicles, and I am doing the chartered accountant profession, but I have paid GST on leasing, renting, or hiring of motor vehicle means I cannot avail the ITC on those services. Such services when provided by an employer to its employee under a statutory obligation. Okay. Statutory obligation means Factories Act, for example, Factories Act may provide you should do these things for employees. You should provide these things for employees, or you should provide these things for employees with salary greater than some particular amount. If an act, that is what statutory. If an act says you should do something, if an employer should do something to his employees, that is a statutory obligation. If the statutory obligation says that leasing or renting or hiring of motor vehicles, you should do that to the employees. In that case, in that situation, that manufacturer can avail the ITC. If there is no statutory obligation, manufacturer is on his own intention or at his own discretion, he is providing those services, means he cannot avail the ITC. The same ITC and general insurance taken on a car used by employees of a manufacturing company for official purposes is blocked. ITC on maintenance and repair services availed by a company for a truck used for transporting its finished goods is allowed. Since transporting of finished goods since the trucks can be used for transportation of finished goods, is under exception. This maintenance and repairs and availed by a company for that truck is allowed. If that transportation of this finished goods is allowed, then its services on that eligible vehicle also allowed. If the vehicle itself, is not allowed, the services on that vehicle also not allowed. Similarly, ITC and general insurance services taken on cars manufactured by a car manufacturer company, because they are in the same line of business. Not in the same line of business. This is the eligible motor vehicle to take ITC. So the services on that motor vehicle also allowed. Next is the class B of this section 17, subsection 5. Food and beverages. Say employees or the CEO or chairman, whoever, they frequently visit, they frequently go out of station, they will have food and beverages outside, and they will claim, they will give, wherever they go, they will give the GST number. Whether you can avail the ITC on that. You cannot avail the food and beverages. You cannot avail the ITC or GST paid on the food and beverages consumed outside, even if it is for the official visit. Even if it is for the official visit, you cannot avail the ITC and the GST paid during those official visits. Same outdoor catering. For example, a small company, let us say a small company, if they are going to celebrate the its anniversary or Founders Day, whatever, they will do the outdoor catering, and they will provide the food for that, food for all the employees on that particular day. They will contract it to the outdoor catering, and he will charge the GST. On that service also, you cannot take the ITC on those outdoor catering. Since it is at the discretion of the company to provide those services or avail that services. Okay, ultimately, the government will not going to earn anything from these services. So, government is saying, if you have paid 10,000 or 1,000 rupees GST on that outdoor catering, you are not going to earn the same revenue for again for me. So you cannot take that 1,000 ITC from me. That's what government is saying. This beauty treatment health services, cosmetic and plastic surgery. Say what a businessman will do is uh, he'll run some line of business, and wherever he goes, wherever you for beauty treatment, health services, cosmetic and wherever he goes, he will provide the GST number to that person. They will also file the GST return, and the ITC will credit it to the that particular business person's account. But he will do the business of something. It can be trading, whatever. Uh, he will avail all those ITC and accumulate it, and this ITC will keep on accumulated in his GST account. Government is saying this beauty treatment, health services, cosmetic and plastic surgery is his personal things. You should not avail the ITC on these services. Only if it is for business purposes and if it is related to the same line of business, and he is going to generate revenue from the same business or same services he availed. Only for that purpose you can avail the ITC. Life insurance and health insurance. Normally, life insurance and health insurance, if you pay, if anyone pays, means they have to pay the GST. On those GST we have paid, you should not claim the we should not claim the ITC. But the exception is, see, I am running the beauty treatment center. I am running the health service. I am doing the health services. I am doing the cosmetic. I am running the institute. I am running the concern of the doing cosmetic and plastic surgery. If I have availed or I have paid the GST on these treatment or these services, means I can avail the ITC. I am running the hotel. I am running the hotel. I am running the restaurant. I have availed or I have paid the GST on these outdoor catering. That is, if you are consume these food and beverages or outdoor catering for the personal consumption, you should not avail. What they are saying is, outdoor catering, you have availed the subcontract. You have availed the subcontract means, or you are giving the subcontract to somebody. If you are going to give the subcontract of the, you have received the outdoor catering contract, but you are going to subcontract to the someone who some others, and you are going to pay GST on the bills raised by the subcontractor. You can avail the ITC. The same, what is the subcontracting economics? The same intention, same line of business. You should have the same line of business. That is, such goods or services when used by a registered person for making an outward taxable supply of the same category of goods and or services, or as an element of a taxable composite supply. Composite supply or mixed supply in GST is, composite supply means, for example, what is the example? Composite supply means you are availing a services with another service. See, if you are availing this outdoor catering along with some other supply, on the another with some other supply of service means that is available. Such goods or services when provided by an employer to its employees under a statutory obligation. For example, if any Factories Act or Employees Act, any act says that you should provide the afternoon meals to the employees means, and if the company is doing this outdoor catering, these companies are availing services from the outdoor catering, and it is under the statutory obligation, you can avail that company can avail the GST paid on that outdoor catering. Okay, that's what this such goods or services when provided by an employer to its employees under a statutory obligation. Same, a manufacturing company purchases food items for being served to its customers free of cost. ITC on such goods is blocked. A caterer of Amritsar has been awarded a contract for catering in a marriage to be held at Ludhiana. That AB and Co has received a contract. The firm has that AB and Co has given the contract for supply of snacks to be served in the marriage to CD and Sons. He is going to provide the food, main food and all everything. AB and Co is going to provide the main food, everything. That snacks, small snacks and all, it has subcontracted to some other firm, that is CD and Sons. Now that AB and Co can avail the ITC, that is GST paid on that contract for supply of snacks, he can avail this ITC. This is the exceptional case. That is same line of business. He is also contractor of supply of goods. He is also contract that AB and Co also contractor of supply of goods, that supply of food or outdoor caterer. CD and Sons also in the same line of business. They can avail the ITC. Next, ITC on outdoor catering services available by a garment exporter for a marketing event organized. What is the link between garment exporter and the outdoor catering services? So he is availing those services for his own on his own intention or his own needs. So for its prospective customers is blocked. This is the sales promotion. So you should not avail the ITC on this. The government will not. The government cannot. He cannot generate revenue from these services. Outdoor catering services is availed by a company to run a free canteen in its factory. The Factories Act 1948 requires the company to set up a canteen in its factory. ITC on such outdoor catering is allowed. This is exceptional case where statutory obligation an employer should provide to its employees. Okay. Membership of a club, health and fitness center. Travel benefits extended to employees on vacation, such as leave or home travel concession. First, we can see membership of a club, health and fitness center. Say these business people will join a club, or for example, they will join in the Rotary Club. Example, Rotary Club, everything, this Lions Club, so many clubs are there. They will charge GST for the membership fees they are collecting, yearly membership fees they are collecting. They will charge GST on this, even though it is for the purpose of business. Even though it is for the purpose of business, also they are joining in the club. Even though it is for the purpose of business, that membership, the GST paid on that membership of a club or any other health or fitness center is prohibited. The same travel benefits. See, this leave travel concession is provided by employer to its employees as a part of salary. Either they will provide as a part of salary, or they will provide, they will reimburse to the employees based on the amount expended for his leave or travel concession. What that employee submit is the invoice he has got from that those during leave or home travel concession. Those invoices you will be having the GST, and he would have given the company GST and all everything. For the leave or home travel concession availed by the employee and submitted to the employer, for those GST paid, the company should not take the ITC. But the same, if it is a statutory obligation, the company can avail the ITC. Not only travel benefits, membership of a club, health, fitness center, if it is a statutory obligation. Mostly the statutory obligation will not say about the membership of a club, health and all. But if it is a statutory obligation, in this case, you can avail the ITC. The managing example for this. The managing director of a company has taken membership of a club. The fees for which is paid by the company. Sometimes the company may represent, to represent that company, they will include the managing director in that membership. For that, the company will pay. The GST on paid for that membership for managing director is blocked. It is not available. A company avails services of a travel agency for organizing a free vacation on its top performing employees. The company itself arranging for the leave travel. ITC, that is GST paid to the travel agency, is blocked. Class C of the subsection 17, Class C of the section 17, subsection 5. Works contract services for construction of immovable property is blocked. First, what is works contract services? Say for example, a construction of building is going on. Immovable property. Here, immovable property includes trees and shrubs, walls and buildings. Including means these compound walls. The amount expended or the works contract services availed for building the compound wall also prohibited. Works contract services. What is works contract services? Works contract services include the not only pure services. It is not pure services. Works contract means the combination of goods and services only. Works contract services. But the services plays the major role over there. For example, if you are building, if a person is constructing a building, that plumbing work and all, if he's taking the plumbing work or any other small or different works relating to that construction of immovable property, he's availing the services from the outside person, and he is charging the ITC and he is paying the GST. That constructor is paying the GST means that works contract services availed on that construction of the immovable property is prohibited. Say for example, a businessman is building constructing an office building or factory building to run a factory to set up his machines and all. He would have availed the services, these works contract services for the construction of immovable property. He cannot claim that ITC, but exception is Exception is if he is a, see, I will categorize into two. This one. Either he himself, either the works contract services is invoice is raised in the name of the builders, developers, or contractors. Because builders, developers, contractors are they will provide only the services relating to build the immovable property. Okay, but the owner is different from the builder, developer, and contractor. Owner of that immovable property is different from the builders, developers, and contractors. What they are saying is works contract services availed and invoices raised in the name of these builders, developers, and the contractor means they can avail the ITC. If that works contract services, they have availed the works contract services, if the invoice is raised in the name of the owner of that property, owner of that immovable property, means that ITC is blocked. That's what works contract services for construction of immovable property is blocked. But if it is availed by the builders, developers, contractors, is that ITC is available because they are in the same line of business. Works contract service, they are construction service. Builders, developers, contractors are provider of service. That is, they are assisting in building the immovable property. They can avail the ITC. Same exception is it is an input service for further supply of works contract services. Same line of business, that is subcontracting. Immovable properties, the main exception is if works contract services is availed for the for example, if somebody is constructing and he is installing the plant and machinery. But wiring work should be given only by the electrician. Okay, anyone can dismantle and attach the plant and machinery. Okay, but wiring work can be done by the electrician. He will purchase the goods and do the service of make run the plant and machinery. Okay, he is so this work contract services availed, which results in the construction of immovable property, that is plant and machinery, means that ITC is available. If that immovable property is building or walls, means that is prohibited. When the value of this plant and machinery, if the works contract services on this plant and machinery is available, irrespective of their line of business. When the value of works contract service is not capitalized. Okay. Works contract services is not capitalized means, for example, if I said the invoice can be raised in the name of the builders, developers, contractors, and also in the name of the owners. If the invoice is in the name of the builders, developers, contractors, means they can avail the ITC. If the invoice is in the name of the owner of the immovable property, means they cannot avail the ITC. But that owner, say for example, that invoice is raised in the name of the owner, and that works contract service, say for example, that works contract service costs rupees 30,000, and you have paid the GST on that. If the owner has not added that value of that works contract in the immovable property value, say for he is constructing that those building for 20 lakhs, and he has not capitalized that 30,000. Instead, that 30,000 is expended in the P&L. Instead of taking that 30,000 to the asset side, he is debiting it in the P&L. On that amount, now he can avail the ITC. If he has capitalized, means for example 2,30,000 is added in the asset instead of 20 lakh, 20 lakh 30,000 is added in the asset. You cannot take the ITC on that 30,000. That's what here, when the value of works contract is not capitalized, which means it is expended in P&L. It is not added to the asset. In that case, ITC is allowed to all recipients, irrespective of their line of business. Even if that owner is not in the construction line of business. That owner is going to do some other business. He can avail the ITC if he has expended those works contract services in the P&L and he has not added it in the asset side of the balance sheet. Example, ITC on works contract service available by a software company for construction of its office is blocked. This is subcontract. Works contractor CDNCo of Noida has been awarded a contract for construction of a commercial complex in Lucknow. The firm availed services of a local works contractor of Lucknow. This is subcontracting for the construction of complex. ITC on such works contract services availed by CDNCo is allowed. ITC and works contract services availed by an automobile company for construction of a foundation on which a machinery is to be mounted permanently is allowed. ITC on works contract services availed by for construction of is a consulting firm has availed services of a works contracted for repair of its office building. The company has booked such expenditure in the company has booked such expenditure in its profit and loss account. ITC on such services is allowed. A telecommunication company has availed services of a works contractor for repair of its office building. The company has capitalized such expenditure. Capitalize means they have added the expenditure amount to the building account. ITC and such services is blocked. The same in case of self-construction of immovable property. Self-construction means as I told, the invoice is raised in the self-construction of immovable property means see, for the construction of immovable property, you have to buy the cement, bricks, everything. For those bricks you have purchased, you should have paid the GST on that. GST paid on that cement, bricks and all, ITC is blocked. If you have paid a GST for the construction of plant and machinery means it is allowed. The same if you are value of the bricks, value of the cement, if you are not added to the value of the building or it is not capitalized, you can avail the ITC on that. Same when the construction is not on own account means if you are a builder, you are just doing the service of the building the immovable property. This case is the builder or the contractor will buy the cement everything on his own invoice or in his own name. The invoice is raised in his own name. In the name of the contractor builder means they can avail the ITC. If the cement, bricks and all bought in the name of the owner means it is blocked. If it is invoice is raised in the name of the owner, but he has expended those expenditure in the P&L means it is availed. That is this. 17 subsection 5. For the composition scheme means he has to pay the GST or 0.5% or 1% on the total turnover, total taxable turnover. Irrespective of the how much ITC he have, he is not supposed to even 1 rupee of the ITC. He is not supposed to avail even 1 rupee of ITC. Just based on the total turnover, he should keep on pay the tax. Those people should not avail any of the ITC. Any supplies, any inward supplies, any inward supply of goods, any recipient, any receipt of service, whatever GST he has paid, he should not take the ITC. Next, class F, section 17, subsection 5. Inward supplies received by a non-resident taxable person. See, who is non-resident taxable person? Non-resident taxable person is someone who is a non-resident. He occasionally come to India and trade or provide some service, and he will fly off. Those persons are non-resident taxable person. He will not have the permanent place of business in India. Say, for example, seasonally he will come for 2 months and he will do some trade and he will do some services and he will fly off, and he will come next year. He will do the same sort of a trade or different trade. He will provide some service and he will fly off. Like this, these persons are non-resident taxable. For these persons, ITC is not available. Here they have to pay the tax on their total turnover. Same, class G, section 17, subsection 5. Inward supplies used for personal consumption. So what they will do is, they will do this service. Most of the service related companies may do this. Service related companies, what will do is, or even provider of goods or manufacturer, they will buy furniture, they will buy AC, but it will not be available in factory or office, or it will be they will, if you go and see, means they will use in their own house. But they have provided their GST number and they have get the invoice using their GST number and they have availed the ITC. That is blocked. If you are going to use a particular item for your personal consumption, you should not take the ITC. You should not avail that ITC, even if ITC is paid in your GST account. Class H, section 17, subsection 5. Goods that are disposed by way of gift. Goods that are disposed by way of free sample. Say, if you are buying a gift, you are buying an item or buying an object or article. You would have paid the GST on that and you will avail the ITC. Why their government is giving ITC? In the intention, you will resell it, you will collect the tax from it, and you will deposit the GST collected from the ultimate consumer. If you are going to give that object or you give that thing to that end consumer as a gift or free sample, where is the revenue generating? You cannot generate the revenue. You will not collect the tax from that people. You will not deposit to that government. So government is saying, so please don't take that ITC from me. Keep that ITC as it is. That's what they are saying. If you are not going to collect tax from the outward supply, you should not take the ITC from the input services or input goods you have purchased or GST paid on your input services or capital goods. That is the argument. So goods that are disposed by way of gift or goods that are disposed by way of free samples. goods that are disposed of, lost goods. Lost good means you would have purchased bulk items, you would have purchased from somewhere, from some other city, and you're bringing that goods from that city to your current city where you are going to sell it. Some goods may would have lost by mistake or by negligibility, whatever. You should not claim, for example, you have goods, you have purchased goods worth 50,000 and you have lost the goods worth 10,000. Somewhere you have lost. So 20% of the goods you have purchased, you have lost. So that 20% of the GST paid on that goods, 20% of the GST paid on goods. For example, you have paid 1,000 rupees on that 50 example, take for simplicity. For that 50,000 value of goods, you have paid extra 10,000 value of 10,000 of GST. Now you have lost the 10,000 value of goods. So you are having only 40,000 rupees, 40,000 value of goods now. 20% of the goods you have lost. On the 10,000 you have paid GST. On the GST paid 10,000, you should not take the ITC of that 20%. For example, 20 on that, what is the 20% of that 10,000? You can avail the ITC only on 8,000. That is 10,000 minus 10,000 minus 20% of 10,000. That is our last. For stolen goods, the ITC on that particular 1 day shelf value or 1 week shelf value or 1 month shelf life. Sorry, shelf life. After that, that it will get expired. You cannot consume that goods. You have to destroy. No other way. That goods, the ITC paid on that goods, you cannot avail the ITC paid on that goods once it is destroyed. You should not take the ITC of that goods. But exceptions are there. What is the exception? The sales promotion schemes, sample and free gifts. Sample and free gifts. In that first sample and free gifts alone, if it is covered under Schedule 1 of the CGST Act. What is the Schedule 1 of the CGST Act says is for goods or services you are doing the outward supply means you will take the consideration, that is amount, either by cash or through a bank account. So when you sell a good, you will get the consideration. What the Schedule 1 says is, even if in GST there is a supply, goods transaction is known to be supply only if you have consideration. But there are some exceptions. Even if you don't have a consideration, that is, if you don't pay consideration, but you have availed, you have transferred the goods or you have sold the goods, you have provided the service, but you are not received any consideration. There are some cases for even if you don't get the consideration, those are considered as the supply and it is taxable. If the sample and free gifts if you are giving the sample and free gifts, if those are covered under that schedule 1 of the CGST Act 2017, for which ITC can be availed. Even if, say, for sample and free gifts and all, you will not get the consideration. That's why they are saying if it is covered under schedule 1 of the CGST Act 2013, ITC on the sample and free gifts are can be available. Buy one get one offer. See, the chocolate, for example, a Dairy Milk chocolate costs rupees 20. They will charge GST on that. They are providing the offer, buy one get one offer. You can take the second chocolate also for the same amount, 20. In that case, you can avail the ITC. Discounts, including buy more and save more discount. This is discount is at the time of the discounts includes buy more and save more. Discounts, this discount, this third point, discount denotes the discounts available at the time of the supply. For example, if you buy for rupees 500 rupees, you would have bought goods worth 450 rupees in the supermarket. They will say if you get for rupees 500, if you purchase for 500, you will get some percentage of discount. They are saying. In that cases, for the discount amount, for the discount amount, you can avail the ITC. Same in case of secondary discounts. Secondary discounts is discount not at the time of the supply, but at the later stage. For example, you have availed the you have ordered goods worth 1,000 rupees, for example. Invoice is generated from your seller and you have received the item, but you have not made the payment. You are paying after 15 days, for example, 10 days. While paying that amount, 1,000 rupees, you are paying only 900 rupees. But the seller has raised invoice for 1,000 rupees and he has charged GST on that and he has filed the return also for the 1,000 rupees. But you have paid only 900 rupees. You are getting the secondary discount 100 rupees. That GST on that 100 rupees availed as discount also, you can take the ITC. So these are the 4 exceptions to the gift free sample loss with stolen goods. Clause I of this section 17, subsection 5. Tax paid in fraud cases, detention, confiscation. That is tax paid in case of in the form of penalty or late fee, any for indisciplinary action. Tax paid in case of indisciplinary things, you cannot take ITC on that. So, and the blocked credits, these are the concepts involved. In case of, if you have queries or any doubt, or let us have a discussion. Any
If
student?
you have any questions, you can ask. There is no questions.
Okay.
You can give your vote of thanks.
So, hello all. A very good morning to everyone present today. It was a really informative start for the day. On behalf of the whole fraternity of Sikasa MBSCRC, I propose my most sincere thanks to the guest of honor, Sri A. Jayachandran sir, for taking time from your busy schedule. Today's session was filled with immense knowledge that's really important to understand the underlying concept and subjects that we study. The concept of block credits is so much so important that we will have to thank you for your patience while explaining it, sir. Thank you, sir. I extend a really hearty word of thanks to our chairperson of MBSARC, CA Manimegli ma'am, Secretary Venkateshan sir, Treasurer Hanumandan sir, and Sikasa chairman of MBSARC, Chairman sir, for organizing a day where we could gain immense knowledge. Finally, I want to extend my gratitude to all the students for enrolling into this session. Thank you all.
See, I have received one question from Mohana Selvan CK. Whether we get ITC, Chairman, can I?
Yes, you can
answer? Whether we get ITC on purchase of ambulance. See, ambulance is mostly bought by the hospital. Hospitals are provide hospital services is exempted actually. For those who are providing exempted services, you cannot take the ITC on the input. But for the hospital, if the hospital provide other services, including X-ray or lab, they are having the medical store inside the hospital itself. Only that particular percentage or proportionately they can avail the ITC on that ambulance. Not the whole ITC you cannot avail. Either the proportionately you can avail, or only for the hospital. The hospital is doing the only that health services alone, means they cannot avail the ITC. Okay.